Good morning, everyone. Good morning. The title of this panel is simple, but the question is not. When does Nutra become investable? In pharma, the investors understand the risk, whether it is clinical, commercial, compliance, or competition. In consumer, the investor understands the brand, the channel, unit economics and margins. Nutraceutical is right in between of both these sectors. That makes the opportunity extremely exciting, but sometimes it's easy to misunderstand the sector. A nutraceutical company which is fast growing does not make it investable. A supplement which has great ingredient, but science alone does not make it a business. A consumer brand which has a brand which has a good consumer pull may not clear diligence in science, manufacturing discipline. So investors ultimately do not invest in exciting stories. They invest in risk which they can understand and underwrite. Today we have a unique panel representing 4 different perspectives. We have Mr. Amal Kashlikar, CEO India Business of Torrent Pharma. We have Mr. Atish Majumdar, representing OTC and healthcare in scale, Senior President from Mankind Pharma. We have the Panju Basu, co-founder and partner at Fireseed Ventures, which represents consumer investing in India. And we have Yoni Klickman, Managing Director, Peak Bridge Venture Capital, which represents global investment in ingredients and innovation. My objective of this is to make the discussion practical. By end of the session, founders should know what they need to fix before raising capital. Investors should know what differentiates momentum from durability, and strategic buyers should know what makes nutraceutical assets acquirable. Now, coming with the first question to the panelists, starting with Mr. Yoni, what does nutraceutical company becomes investable? When does nutraceutical companies become investable?
Sure. Good morning, everyone. Sorry about the small delay. I lost my attention span for a second in the back there. I apologize. So I maybe just quickly comment on the ingredient side of things and on the brand side of things. So on the ingredient side of things, which is typically where we invest at Peakbridge, and also my personal history, I would say that there's a certain amount of things which are, I would say it's like having the football jumper to get on the ground, which we consider to be non-negotiable, which is compliance, a solid supply chain, regulatory go-ahead. All of those things are in the non-negotiable part of it. Without those things, we don't even look. Afterwards, on the ingredient side of things, I think that we're looking at the really important, what I call the magic triangle of a great ingredient, which is strong human clinical studies, the IP platform, so IP around product or process, preferably around the product and less about the process. And the third side of things is what is the marketing vision? What is the marketing story? We're not interested today in ingredients which target too wide demographics. We're interested in ingredients which have very clear demographics, very clear use cases, and very specific condition management. So that's really just sort of high level on the ingredient side of things. On the brand side of things, we're investors also in brands. I would say that one of the things that we understand from our benchmarking and also benchmarking of other VCs and PEs who invest in the space is that, and at the end of the day, we're in the job of investing in a company and selling the company afterward to get return on investment for our investors. What we understand is that there's a huge upside these days in EBITDA multiples for the branded, or rather the brands which have science behind them also. So still today, particularly in the United States, you can see many D2C companies which are going through Instagram, TikTok, etc., but the story behind them is not sustainable in our opinion. We are looking for a science-backed, sustainable story. Of course, if we're investing in a brand, we need to see traction. We are much more interested in direct-to-consumer brands than in classic retail brands now. We think that what we see is that the retail market in supplements in the West is not growing. The part of the market that is growing is in direct-to-customer channels, whether it's internet, practitioner, etc., but less in brick and mortar. So we want to see access to those markets with all of the perimeters, with all of the correct parameters. Maybe I'll just leave it there. We can talk about it for a long time.
Thank you. Dipanjan, your view on the same thing as an Indian investor.
Good morning, everyone. So I would just add to what Yoni said. I think science first, understanding of the ingredients is important. So the right to win really is how deeply you can go into the formulations, the R&D and the science. We have now a bunch of investments in India who are science first. But I think one important thing which we look for from an investibility standpoint is how do that translate into a regime retention routine for the consumers. And we are investors in direct-to-consumer businesses. And one of the things which stands out between a good company and a great company is somebody who has gone beyond just the formulation and the science, but really making it a consumer habit. And that's where the economics and the financial viability of those businesses become better if there is routine and regime. We have investments in companies like Traya, which is a hair health company, Wellbeing Nutrition, Ace Blend. These are all companies which are very science first in their approach. But what they have also been able to do is understand the behavior of how nutraceutical and healthceuticals are consumed, and can it become a monthly, daily, weekly habit. Unless that gets formed, retention doesn't get formed, and with no retention, you're continuously acquiring new consumers, and losing a lot of money. And even from an exit standpoint, when you are either going IPO or you're selling the company to a strategic, like any of the gentlemen here, they would look for that stickiness of those businesses. So that's something which we look for, apart from that being a very science first company.
Thank you. Now coming to the gentlemen, Atish, what would you at Mankind look when you are showcased nutraceutical companies before you acquire the brand or the company?
Good morning, everyone. From the optics that we have and the way we look at nutraceuticals today, I think a patient or a consumer travels a journey which starts from a problem, maybe goes to interest, and from there it goes to confidence, right? You're interested in a nutraceutical product, and then through influencers, doctors, peers, friends, you get a kind of confidence of using this product. It could then go to conviction based on usage and or a doctor recommendation. And from there, it could probably travel to a habit or a trust. This is the normal journey. So when we look at a product, we would always try to identify how is this product kind of positioned in terms of the data it has, in terms of the therapy that it is addressing, and what kind of trust it could build up, simply because nutrition as we understood it has completely undergone a change. We always thought nutrition was about deficiency, but today with disease is changing and how diseases really shape up and progress has completely changed. Forever we used to talk about an organ getting affected or a diabetes patient or a hypertensive patient, but the fact is no disease travels in a singular manner. And today, nutrition has become an essential part of the treatment, right? And so, when we look at this whole thing, we look at how this nutritional product would be addressing a white space, a need, or a metric which a patient can measure. And it really would one day travel from just a want to a need. That's the way we'll be looking at it.
Amal, your views on the same.
Good morning, everyone. I'm happy to be here at this conclave. I think a lot of points have been covered by my colleagues out here. I think when we look at investing in anything, and so there are two things, right? When you try to acquire an assets and what happens in the market. So that I believe there is a lot of difference in how each one views this. But one, I think if you purely go on the merit of the product, you want to look at science, no question. Because, coming from healthcare, pharmaceutical background, we want to ensure that science is robust, point number one. Second, it's addressing an unmet need. So there has to be a need in the marketplace. Third, it has to be scalable. There has to be a size. And of course, there has to be a margin in it. Everything else, whether it is manufacturing, regulatory, and those are the norms where if you have a strong, science with studies, with claims, all this documentation, manufacturing quality, everything can be addressed. But if you're weak on science, if your clinicals are weak, you cannot prove, your proof points are not in place. It's not addressing an unmet need. Yeah, and he's very nicely articulated in the flow and where it comes in. And it is not scalable. If you're doing it for a small scale, it's not worth it, right? And there has to be margin in this. Now that's what one looks at. But what happens finally in the deals is a different world. You know that better. But I'll just tell you from this perspective.
Coming back to you, Dipanjan and Yogi, what is the biggest mistake investors have made while evaluating nutraceutical companies? Dipanjan, start off.
I think, as I mentioned, there are two aspects. There's the trust, the nutrition driven by R&D, and then there is a consumer aspect. I think the most of the common mistake is when both from founders and investors, where you over anchor on either one of them, right? So you go so deep into the science of it, then you miss the use case. Whether it's a B2B company or a B2C company, right? It's about understanding what do the consumer looking for. So you completely miss the consumer angle. Or you are so obsessed about on the consumer side that you are just making products which is trend first. Today, for example, hydration is a big trend, right? Yeah. Right now, everybody is building something in hydration without necessarily looking at like what really is the science behind it, etc. So I think either of excessive anchoring on each of these either sides of a nutrition company may lead to company being lopsided, and that's the mistake which has happened in the past.
Yoni, your views on global investing?
So first of all, I clearly agree that it's super important to find the balance between the science and who is our consumer and how do we keep the consumer, whether it's B2B or B2C. And that's a little bit about, think about what the demographic is, what the population is, what the clinical trials is around that population. So that's a very important thing. And the second thing that I would add is maybe also just a little bit of a follow-on is that I think that we've seen a lot of companies who have invested in the current trend, and we're not really interested in people who are investing in the current trend. And I'll give it a great example. There's a huge amount of noise in the world today about protein and about new proteins, alternative proteins, etc., etc. At Peakbridge, we invested in fibers 5 years ago. And we invested in clinical studies in fiber blends over 3 different kinds of fiber companies. And I think that we had the foresight to understand that in 4 or 5 years from now, fibers will become a huge dietary need, and that's what we're starting to see today in the world. So I think a good investor has to think about what does the future look like, and not investing in today's trends, but in tomorrow's needs.
Thank you. Coming back to Amal, how do you see nutraceuticals closer to pharma, OTC, or consumer products?
So I think nutraceuticals sits very nicely on the cusp of pharmaceuticals and OTC. And why do I say that? Because you cannot separate the two. Now, if you look at any lifestyle, and I have this acronym that you need meds. Meds is not as in medicine, but for good health, what does the doctor look for? You need good mental health, M. You need to exercise, diet, and good sleep, right? So this is the first thing that when you go, your problem, doctor will tell you exercise, diet. So in diet comes the nutrition aspect. It's your lifestyle, how you live, right? So if you try to isolate separate the two, you cannot. I think they are very much operate in an integrated way, and more you realize that HCPs and healthcare providers are looking not only, of course, in terms of medicines, in terms of treating the diseases, but also are focusing on patients' lifestyle, and they very often they have a separate advisor who tells them about what to eat and not to eat. So I think there is that very integrated approach that the healthcare practitioners take today. Second, I think consumers are much wiser today. Patients are much wiser. They themselves Google search, or now ChatGPT, of course. Everything, whatever they do, they go to the clinic much more well prepared. They are more knowledgeable. Even when they interact with doctor, whatever doctor recommendations doctor make, they'll go and do their own study and analysis. And so you have much, smarter and more aware, I would say, more aware patients who are conscious of this. So I think it operates in a very integrated way. The go-to-market strategy may differ from company to company. How do you address that? But it's very integrated and revolves around welfare of the patient.
Artist, do you think a pharma company now will launch product directly to consumer, or it's again starts with doctor and goes to consumer?
I think just to add to what Amal said, I think the shift definitely is taking place in terms of a patient or a consumer really going and choosing the product, to nutrition moving into a doctor's prescription. That shift is definitely taking place, simply because the goals of treatment has changed. For many years, the treatment goal was all about mortality, measuring, that how much can we reduce mortality. But today it is about lifestyle and daily adjusted life years. And so nutrition becomes an essential part of a doctor's prescription. Having said that, I think if one were to look at the nutritional market today, going to consumer would ideally be the end point, because when you talk about 1.4 billion people, I think everybody needs a supplement and a support, just like you get food, right? But the fact is, nutritional products today are being used as a mainstay of therapy in the solutions that we are finding to diseases today. The big problem we have today is obesity. We have oncology growing, the incidence of cancer growing, and autoimmune diseases growing. And all of this lead to side effects, which needs to be treated with nutritional supplements rather than drugs. So my submission here would be, go to the doctor. When you have earned that trust, then scale it up to the consumer. Thank you.
Thanks for the initial view.
Can I just add something to that? Because I think that, is it okay? Just on the question of pharma and Nutra. I think that we don't need to think about it as either or, right? I don't think it's either a pharma solution or a Nutra solution. What we're seeing a lot more in our investment is basically how do nutraceuticals, how are they companions for pharma drugs? So we recently made, one of the things that we're seeing now is nutraceuticals which can support the GLP ramp off. So we know that there's a point where the patients leave GLPs, 50% of them have their weight returns within 12 months. So we're trying to look for nutritional solutions which will support the GLP drugs in the ramp off. Similarly in IBD, treatments, biological treatments. What can you use for nutraceuticals to treat the side effects of the biological drugs? So we try to think of them as companions and not an either or. This argument which is going on about 25 years, is it a pharmaceutical drug or nutraceuticals? We need to think about how they can complement each other and not fight against each other.
Thank you very much, Juni. Thank you very much. So, thanks everyone for your initial comments. I would want to spend Nutra investing through pharma lens to start off. So, Amal, the first question for you. When a pharma company evaluates a nutraceutical assets, what are absolute non-negotiables?
So when we look at a nutraceutical asset, clearly, goes back to the first point I made, is that we look at what are the claims the product is making. We look at what is the science, what are the studies, is it robust, and what, the point I mentioned earlier is what is the need it is going to address, right, in the marketplace. So in case of oncology, that, in case of cancer patients, when they take oncology drugs, they lose muscle mass. So, how is it going to complement for them in terms of supplementing their nutrition? So it's really trying to understand whether there is enough data and robustness to back those claims. I think that's the foundational for us. And of course, then is all the question of how does it fit in our portfolio, what resources we are able to put behind it, how much do you think we'll be able to scale up, and the stickiness, in the sense, are we getting into a segment which is a growing segment or a segment which is going to be stagnant? So I think these are the broad things, but the foundation starts with the science, the claims, and the studies, which have to be really, really robust. Unfortunately, and I'll make a statement, not many of the assets that I've seen, and I'll not take any names, have very clear, clean data.
Just coming on the sub-segments, which are the sub-segments where, say, you want to scale, or which is the priority sub-segments for acquisitions at this point of time?
I mean, there is no particular segment that I would like to talk about in terms of acquisition. So if you talk about nutraceuticals in general, where, it's not about that we go with the intent that we want to acquire something, like we may do something organically. We start with the larger picture, where do you want to be present? Now we are present in practically every therapeutic area that's in the healthcare segment, right? So we try to identify what is the best route. Do we go organic? Do we partner? Do we license in? Acquisition is just one route. So it's not an exclusive route, or one looks at that, right? And our intent is obviously to kind of drive a leadership in the healthcare segment. So we look at therapeutic areas and continue to identify molecules and segments that we bring in. So wherever nutraceutical becomes complement, VMS of course is an obvious segment and we have a very strong presence there. Nutrition we are into, area of oncology or in area of gastroenterology, wherever there is a supplementation in terms of from a nutraceutical perspective, or GLP-1, there is a lot of, as we know, the patients who are on GLP, there are so many nutritional needs which come in some supplementation. And many of the products already exist in the marketplace. So it's a question of, sometimes it's just a question of positioning your products. So that's how our approach would be.
Atish, coming to you, what's your view is what turns a nutraceutical product from a supplement to a repeat healthcare habit?
See, very simply, it is trust and the experience of the patient. And like I said earlier, when the patient starts really feeling that I want to have this and it is something which I need, right? But if you were to ask me what really helps one transition this journey, is the evidence of science for sure, and the conviction which you get from using the product or whether it is prescribed by the doctor. That's what really helps you to make it a daily habit.
Amal, coming back to you, single biggest reason to reject a Nutra deal during diligence?
I think of course, okay, let's put it this way. The first one that I reject very often is the expectation of the seller. Now, if it is out of whack, then there's no point discussing, because then there is no ROI. I mean, let me be frank about this, because we have to be very disciplined about our financial analysis, anyone, right? And our return, and go back and check that you're able to deliver on that. That's point number one. But leave that aside purely from a science perspective. Obviously, clearly, when you look at the asset, we look at how it has been scaled up. What is the product? What is the the science, the studies, regulatory framework. Look at all the antecedents. Go and talk to the consumers. Go and talk to the channel. Try to understand every single aspect of that. And obviously, biggest reason for us to reject would be that we do not find enough robustness in the data. And we don't find consistency in terms of how the brand has been built. But of course, one can factor that, yes, if I take this over, then I will invest what I will need to do to invest. But that's part of your financial analysis. The question is that, is the foundation strong enough of the brand for which they are claiming value, which I would then be able to scale up. And the foundation has the typical claims, studies, regulatory, manufacturing, quality.
Thank you. So science is critical. Coming back to Aatish, what's your view on whether Indian nutraceutical market is all about premiumization or democratization?
Honestly, I think it's both. Like we were hearing in the morning, there is no one India. There are multiple Indias. So it's really not about having a premium product, premium price product, or a product which is more affordable and more accessible. I think the choice here is not about or, it's about and which stage you are in, which is the therapy you are really focused on, and what are the tailwinds over there. My take would be that when you start off, perhaps you go premium, and as you want to scale up and you want to reach the rest of the country, that's when you really start bringing in SKUs with lower pricing, making it much more affordable, because the real value will be unleashed when you really access the population which is there for you to take, right? So I would say it would be a mix.
A question for both of you. When a founder approaches for strategic capital to both of you, what should he build before approaching you guys?
The first thing, very simply, would be the operating therapy area. The second would be the data and evidence that is connected with the product. And here, I think precision nutrition is growing. So the scalability of the product would be very, very important over here. And third, definitely the margins in the product.
I think he's covered all the points: scalability, margins, data, science. And I think very often when we meet the founder, we also try to look at the antecedents, or how has he built it. The founder himself should have a very strong character and story to bring to the table, right? Because there's a lot of things, in terms of due diligence, you can do so much, and there's a lot of interaction which happens, right? And of course, you go by data, you do on your research, but sometimes that the founders, they're involved and passionate. Are they hoodwinking you, or they have genuinely built in an asset which they are passionate and proud about? They come to ask money for.
So just to add to Amal, I think there's one more thing we would definitely look at, is his business model. Because if he has gone all consumer, for us at Pharma, we wouldn't like to travel back the cycle. Okay. So that could be one of the things we would definitely evaluate. Amal?
I agree. And in that GTM compliance also is very, very important along the way. Absolutely. Because these are the sure shot way when the product may be great, but if GTM and other things are not the way we would want to build a brand, or there are compliance issues, it will fail anyway.
It's going to fail for sure.
And another question: margin versus scale. What's more important?
Scale brings margin, but yeah, margin is a great start.
I think thing is that you need scale for sure, and you need a route to profitability which is realistic. Because on paper everyone shows, if you want, you beat the worksheet, you beat the numbers so hard that they will tell you what you want to tell, right? Ultimately, so you leave it to some guys, analysts, they will rework to show you a nice IRR and everything, payback period. But I think your route to profitability has to be very clear. Scale is important.
And is there a minimum scale you guys are looking before evaluating? Or depends on the sub-segment? Or
I think, both, and just on the other, both we are largest in the top 5 in the pharma. So there it's not about where we start from, it's to what level you take it to, right? Or, what potential it has. It has a potential to this particular scale. It's very difficult to throw a number, but, both the companies are worth, 10, 12,000 crore in terms of sales. So I think, if you tell us something is going to be 5, 10 crores, will it really get our attention? Not. But if you tell us it's 10, 15 crores, but, it can get to 500 crores. Yes.
I completely agree with Amal. We never invest looking at what it is. We look at what it can become. I think that's the way we do.
thank you. Thanks both of you. Now, let's look at nutraceutical through a lens of an Indian investor. So, Dipanjan, over to you. How do you separate genuine consumer pool from marketing-driven growth?
It's just understanding retention engines. So the way companies approach consumer retention tells us a clear picture on, is it a trend-driven consumption or a genuine habit building and retention-driven consumption. But importantly, one step before that, and I think both Amal and Atish mentioned it in their earlier thing, that is there a real problem, right? Are you solving? So we look at consumers at 3 types: the heavy sufferers, the no sufferers, and the low sufferers, right? So anything which is built for heavy sufferers, which are something like diabetes or mental health or any of these chronic diseases, not talking about oncology and heart health. There are consumers who are deeply suffering, gut, sleep, right? I think anything built towards that will automatically means more science, more efficacy, more clinical trials, will also mean more retention. Anything which is built for no sufferers, like, have a good to have pill in the morning and you will be feeling good. I think those end up having more trend driven, less retention. So that's how we look at even how each company is addressing what segment of consumers within health.
Thanks. You partially answered my next question, but still, will you back great science with average branding or great brands with average branding?
I think neither. And it boils down to like both what Amal and Atish said. If like we are early stage investors, we'll look for companies either building for IPO or any of the large companies looking to buy. It has to deep on both, right? Including good GTM. And we have time and again seen just focusing on one aspect of the business building eventually doesn't cut ice with either strategics or public market investors. It has to be a great company which has to be a foundation for everything. Now you can start in one of the anchors. You can start science first, but eventually end up building great brand. You can start with a great brand and a consumer understanding. It has to be eventually products which are backed by science. So, ideal answer is for a great company, all 3 are important.
What's your experience been in investing in Indian nutraceuticals? In terms of how do you think the sector will scale and how many, say, you get probably 20 deals in a year?
Yeah. So we look at only consumer health. So we are not looking at classic B2B companies, but looking at the penetration of health spend in India is very nascent, right? US is 15% of the GDP is health and health related products. India is just sub 5%, 2 to 3%, right? So there is huge headroom for massive amount of spend both on infra, consumer health, pharmacy, etc. So as a fund, almost 25 to 30% of our total fund, we are a $250 million fund investing in early stage businesses. At least 1/3 of that is health focused, right? Which includes nutraceutical, chronic health, medical devices, and we already have a bunch of investments in these spaces which are doing extremely well, right? Companies like Traya is almost $100 million plus revenue. We have a very good exit in Wellbeing Nutrition to USB Pharma. So there is a lot of liquidity here, a lot of companies looking to buy assets, lot of companies are going from India to global to markets like Europe and US. So it's an amazing time in the Indian context to build in Nutra if it is built in the way which each of us spoke about. I think there's a fabulous opportunity.
Are you seeing enough opportunities out there which are investable?
Yeah, certainly. I think we we do at least 10 to 12 deals in a year, and at least 3 to 4 of them are in the core nutraceutical space. So in a fund of 250 million, we are investing about 35 to 40 companies, and we're looking at 10 to 15 investments in health and nutrition.
Now, let's broaden the discussion beyond India. Yoni, what makes nutraceutical companies globally investable now?
I think the globally investable nutraceutical companies, globally investable, because I think that what we're seeing is that the brands are still very much regional or local brands. So, we don't really see a brand which is becoming a strong brand in the United States having presence somewhere else in the world or in Europe or vice versa. So if you say globally at the end of the day is going to be a science-backed ingredient play, which can really be the powerhouse behind excellent brands in the future. I also, which kind of leads me to the previous comment about great science or great brands. The way that we see it, at least, is it's a little bit difficult to conquer both of those challenges. So often what we want to see is a great brand which still has great science, but the great science may come from an outsourced partner. It's very, very difficult to have a company which has the DNA of developing the clinical science and the ingredient, but also having the great brand presence. So we try and find a way that there's synergies around those stories. But at the end of the day, globally investment is about unique ingredients which are clinically backed and supporting really important consumer needs at the moment.
What's your view on India's right to win in nutraceutical globally?
So I think it's fascinating for, obviously I'm not an expert and I don't want to pretend that I'm an expert, but as somebody who's coming to India for many, many years now and coming in once a year, I can, literally every year that I come here, I see the tremendous change in this country and the economy. So there's a much larger potential population for the world of supplements, I think. There's, as everybody has been telling me, there's much more consciousness about proactive health solutions. So, we see this as being a very, very interesting, robust economy, both for building brands, but also on the other side of things, India has incredible raw materials on the botanical side of things. It has legacy companies which knows how to build ingredients and science. So really on both sides of things, we see really interesting opportunities.
And what do you see global strategic buyers looking at India? Global strategic buyers looking at India, more at brands or ingredients?
So the strategics, I think that what we're seeing, again, both on the CPG side of things and on the ingredient side of things, what we can say very clearly is that none of them really dedicate enough R&D budget to be able to support early stage development. So we see very, very strong M&A. We see, on the CPG side of things, only last month we had the Unilever Brew story, $1.2 billion exit after 3 years of building a great brand, which frankly doesn't have much science behind it. But on the B2B side of things, we believe that if we can build the companies to a point where they have $15 to $20 million revenues and decent EBITDA margin, we expect to see 25 to 30% EBITDA margins in a B2B business. We think that these are incredible targets also for the strategic players. So that's the way that we think about building our businesses.
Thank you. All four of you. Probably it has been discussed earlier in your earlier replies, but still for benefit of the founders, scale versus science, which is more important?
Scaling or?
Scale of the brand versus science of the brand, which is more important?
I think, you cannot completely separate the two, but science is foundational and scale is something where you want to get, I would say.
think he's answered for us.
We're early stage also, so we don't expect to see huge scale at the beginning. We don't expect, and we don't invest already where there's huge scale. We invest at early scale. What we want to see is the ability to scale, both in terms of unit economics, and if it's a brand, obviously, you know, the very, very important CAC LTV dynamics and consumer habits. If it's on the B2B side of things, do you have the supply chain which can support the scale in the future? So we want to understand the scaling journey, but we understand that it can take some time.
If I can answer it differently, not directly answering scale versus science, it is width versus depth. If I have to read this differently, I think our learning is that go deeper. Not every company can actually be an expert in different areas of nutraceuticals. You can't be the best sleep, solving for sleep versus heart versus diabetes. Choose one or two problems where you can go deeper, where you have the right to win from a science and formulation standpoint, rather than going wider and trying to be like a platform type of play. And therefore, if you get scale within that, it shows deep product market fit.
Thank you. One question again for all four of you. What is the key diligence items you look while evaluating nutraceutical businesses? Starting with Yoni.
Sorry, can you repeat the question?
Key diligence item, due diligence item while evaluating.
Okay, so for due diligence, we have a very clear go, no-go platform. So, you know, we really start with the basics. And to the question that was asked earlier, the two main reasons that we reject is one, the regulatory point of view, which is just unbelievable how many founders are not considering. And if you want to scale globally, you've got to be compliant globally, which means that you have to at least have a plan for grass, novel foods, et cetera. So, and the second part is founder and team. We want to see founders who have vision and execution, and it's difficult to find founders who have both vision and execution. And then after those two very important parts, we start going deeper and deeper into, you know, if it's the science side of things, if it's more of a consumer brand, onto the consumer metrics, habits, et cetera, et cetera. So we have a very, very scaled process. Normally, the investment process for us, the DD and early scale will take us something between 3 and 4 months, because we really go into all of the aspects from clinical science to scaling, production, consumer metrics, traction, et cetera.
Yeah, I would not repeat some of this stuff said earlier, but one thing which Yoni mentioned, that it's very hard to find in the same team somebody who is very good in brand and good in science. So what we look for is the founder mindset in wanting to complement and build teams where they are not good at. So there are founders who are science first, but they know that they need to build teams in brand. And there are founders who are brand first and they know they need to have good R&D and science team. So we look for this real aspect of understanding the business end to end. We know that not every founder can be good in both, or you will always have their strengths, but their willingness to complementarily build other teams, that's something which we go very deep into apart from some of the usual ones.
We would definitely start with the founder first, and or the company, and the reputation it has and the business model it has, because it has to complement and fit with the pharma business models. That's number one. The second would be the science of the product. The third would be the evidence around the product, which has already been done or they are going to do it as they move ahead. Fourth would be financial diligence, and fifth would definitely be a quality check on the product.
Yeah, I think they're covered. I don't think I have. Ultimately, you look for, is this sustainable or not, right? Because if any of these elements are not foundationally strong, right? The numbers which are starting point itself, so it doesn't become realistic, because your starting point is from where you are, right? So the numbers that you get, and then you build on that. So to first ensure that is robust in itself. What is the real base, as we call it, right? And I think hence sustainability of what is there becomes important.
One final question for all of you. Your advice to the founders who started building a nutrition business, starting with Amal.
I think there is plenty of opportunity in the marketplace. Market in some ways is fragmented. There is a lot of unmet needs. Growing population needs are increasing. There are more affordable population, coming into fold into the target segment every year. So I think opportunities are phenomenal. Identify, obviously it starts with an idea, and I'm sure all the founders have a great idea. But from that idea to what you take to, I think being truthful and honest in that journey becomes very important. Sustainable, sustaining your passion, sustaining what you do, the choices that you make. Be open to take feedback and advice as you go along. Some believe that what they know is right, which may not be correct. And at the end of the day, you'll not get everything right. Yeah. And that's what I'm saying. Being open and transparent that this is, we believe we did right. And, now beyond this is not, we don't have that kind of strength or capabilities to take, and hence we come to partner. That makes sense. But I think the entire, it's about his vision, his attitude, how what truth and honesty he brings to the table. That becomes important.
I think believe in the opportunity first. The second is go deep, like Dipanjan was just suggesting, which will give you clarity, right? And the third is stay the path and have a very close watch on OPEX as well as operational efficiency. Be frugal like.
Similar, go deep, don't go wide.
Yoni, final comments.
So, first of all, I agree that everything was said. I just want to add one more thing. I would say that my advice to founders is build for the future and not for the present, which means try and anticipate where the market is going in 3-4 years from now, which is the time when again, we're an early stage investor. Try and think about where the market is going and not where the market is today. And that way that you can really grow into the future rather than trying to develop a product which is relevant today. The world is changing fast. So you need to anticipate the trends.
Thank you.